sellers are giving massive price cuts, guys.
Cut the price!
In these 10 cities, and you want to stick around to see if one of your cities is on this list so that you can be updated on what's happening in your market. My name is Orlando. Welcome to the channel. Let's jump right into it. These are 10 cities seeing the most price cuts for homes. More home sellers are dropping their asking price at raising mortgage interest rates, and inflation has eased competition in the housing market. As we know, guys, interest rates have been going crazy. They have been going up and up and up. We have 3 more Fed rate increases, and we are expecting a 100 basis points or 75 basis points increase for the next one, since inflation was at a 9.1% since the last report of the CPI report. Now, it's going to continue to either go up, up, and up, or the Fed is going to have to drop bombs on the interest rates to make it continue to go up, which puts you in a better position for prices to come down. Some cities are seeing more price cuts than others. Boise, Idaho took the lead in June with 61.5% of sellers cutting their asking price, according to Redfin. Now, isn't this crazy? 61%, guys, almost 62% of sellers are giving a decrease. Boise was one of these super white hot areas that prices were just continuing to go up and up and up. And people thought, you know what, this is going to never, ever end. And they decided, you know, we're going to keep pushing up the prices. People are paying and people are paying. But people are saying, not anymore. That time is over. I'm not going to sit here and overpay on a home and pay a high interest rate on top of that when everything is continuing to go up. We know inflation is going up higher and higher. We know everything associated with that is going up. Gas prices, grocery bills, labor, appliances, all of that stuff is going up, and up.
Ladies and gentlemen, we have problems.
And if you go ahead and you jump into this market right now at its current point, will you get a better deal than you did, 6 months ago? Yes, you probably will. But are you still overpaying? Yes, you are. Boise was one of the hotter pandemic markets as work from home anywhere culture prompted thousands of people to flee pricier markets like San Francisco and Los Angeles. A year ago, just about a quarter of sellers in Boise had dropped their prices. Now, one of the things I do want to touch on is the work from home. You know that I did videos months ago where I talked about work from home is getting smaller and smaller and smaller. And when a recession happens, what are companies going to do? What is the number one thing that a company will do to cut costs? It's going to be payroll first, and then they're going to say, hey guys, hey, if you still want a job, you know that big building that we paid billions of dollars for, that campus and all that other stuff, we want you guys to come on back because we need to save costs. We need to use this building that we paid for. So with that being said, I want you guys to take a look at this graph that I have that tells you all the tech companies that have been dropping. Now, this isn't the big picture. This is just tech companies, guys. I want you to take a look at this, and you will see how things are continuing to change. Obviously, we started in August, September. It's not that much. Then in November, Zillow cut a bunch of people. Then we go on and we see Better, January, February. We start to see Peloton, zombie companies, they're cutting all the way until we get into May, June, and July. That's where we are right now. 21,000, 28,000, 13,000. All of these cuts are happening, and why are they happening? They're happening because these guys see their profits are getting less and less and less, and then we're also seeing that they know a recession is coming down the line. And a lot of these companies, with them seeing all of that stuff happening, the number one thing they're gonna do, like I said earlier, is they are going to cut payroll. They're gonna say, nah. And a lot of these companies do. Let me repeat that. A lot of these companies do have work from home, and they've recalled their employees to come back to work. All that office space, and during the pandemic, they told you guys, they put, these news articles out that said, hey, guess what, guys? The work from home, we're gonna be like this forever. Work from home is here to stay forever. But when someone says forever, you should probably think to yourself, is it really gonna be forever? Do you really mean forever, or do you mean until this news cycle, everything goes back to normal, or when it no longer benefits you, you're gonna cut it thin? And that's what happens. It no longer benefits these companies when they're losing so much money. So they're gonna cut payroll, meaning get rid of employees, and they're going to recall for people to come back to their office so they can use the space that they're already paying for. They don't want to waste money on rent, just like you don't want to waste money on rent. So let's take a look at these top 10 markets that are seeing price cuts. We have Boise, Idaho at 61.5%. I mean, that's a lot, right? That 61.5% is a lot, but that 62% is still better than my subscriber versus non-subscriber watching this channel. And I have about 82% of you guys who watch my channel who are not subscribed to my channel. I don't know why you're not subscribed to the channel, but please hit that subscribe button. It will help more people see this content. I really appreciate it. But let's jump back into it. Denver is on this list at 55.1%. Salt Lake City, 51%. Tacoma, 49%. Grand Rapids, Michigan, which is surprising because normally Midwest doesn't have that much of growth. But I think the reason why Michigan has been depressed for quite some time, you can get some real estate there, some homes that were very cheap. So it was bound for it to grow. So I can kind of see that now. Seattle doesn't surprise me. Portland, Tampa. I mean, does anything Florida really surprise you guys at this moment? Miami, Tampa, Orlando, those places are going to explode. They're going to have a nuclear meltdown. When it comes to the real estate market, it always does the same thing. Miami is gonna crash, Orlando, the prices are gonna drop, especially that condo market. If you're in the condo market there, get ready for values to come down. Indianapolis, that's a great market too. I could see that going up. It's Nashville. Nashville is super, super hot right now. So I could see that at 44%. Based on this report from Zillow and Redfin, I'm telling you guys, this is showing you that we are going in the right direction. When things are going in this direction where sellers are cutting prices like this, guys, this means that we are leading, like I say in all my other videos, we are leading in a recession direction. And rates will continue to be pushed up, which will make people not be able to afford homes. But so I want to continue on and let you watch this video that CNBC did to basically talk about exactly what's going on with all of these sellers dropping prices.
Now, after an historic housing shortage, the number of active listings is finally rising, and fast. The latest read last week showed supply up 28% from a year ago, that according to Realtor.com. Now, that's a combination of new sellers trying probably to get in on the end of the red-hot housing market.
You know, are we really surprised? Well, if you've been watching my videos, you are not surprised by, increased inventory. I did videos months ago where going against the grain where people were saying, oh, Orlando, we're going to have low inventory, and low inventory will cause the market to continue to rage on at ridiculous 30-40% year over year. And I said, you know what? I mean, the math doesn't make sense. When you have higher interest rates, won't people decide not to buy homes because they will be priced out? It will be unaffordable. Hence, with interest rates going up, people will sit on the sideline and there won't be the demand, which will increase inventory. But people said I was crazy. I said, Orlando, there's no way, man. There's no way. You're talking ridiculous. And I remember commenting on that and saying, only time will tell. And time told I was right. But the point is that, simple economics, when there's something that causes people not to want to buy houses anymore, interest rate, there can only be one direction that the inventory can go, which is up, because people still have to sell homes. I know there's this thing where people think, oh man, people will only sell homes because they see a chance to make a lot of money. Well, that's not the only reason. People move because of jobs, because of family, because of all other types of things, and those individuals still need to put their homes on the market. And people expectations will come come down to realize, hey,
Last year I could have sold it for $100,000, but this year I have to make it affordable so someone can take this off of my hands.
and that's what's currently happening.
And the fact that homes for sale are just sitting on the market longer, and that additional supply is putting an end to all those bidding wars, as sellers now have to come back to earth, as in, drop their asking prices. Some of the hottest work from anywhere markets of the pandemic are seeing the most sellers cut. Topping the list, Boise, Idaho, where over 61% of sellers slashed the prices in June. It was followed by Denver and Salt Lake City, rounding out the list of top 10 formerly red-hot markets like Seattle, Portland, and Tampa. These are cities where prices went really through the roof. Boise up 60% from pre-pandemic. Nationwide, prices are up close to 40%.
Come on. Now, I want you guys to take a look at this. Just take a look at the green arrows going up. We have Boise at 60% up.
Wait a minute.
How could anyone in their right mind believe that this is going to continue to happen for 3, 4, 5, 6 years, continuing over and over and over? Why? How could this is not crypto, guys. If you want those crypto numbers, then you can go check out Celsius and Voyager and just see where crypto is right now. It's in the gutter. You can't expect prices to elevate like those type of, securities or whatever, right? You can't expect it to shoot up like crypto. Real estate is quite different than that. So for you to think that prices will continue to go up at 60% year over year, heck, let's even go to the next one. 40% year over year nationwide. You got to use your mind on this, guys. There is just no way real estate will continue to go up at that price. And we're seeing it now. Now, I know 6 months or a year ago, you thought to yourself, you know what? It's always going to continue to go up. And maybe you're a realtor and you thought that the fun would never end. But it always does. I always tell people, at anything that is continuing to go up and up and up, it has to go down, down, down. So the same thing applies to real estate. We reached the peak and now we're going down, and the Fed will have to raise interest rates to fight inflation, which will continue to damper demand on homes, which will bring down prices of homes. So that's just what's going to happen.
March of 2020. And just one more quick change, a growing number of buyers are canceling deals on both new and existing homes that they agreed to buy, because they either no longer qualify for the mortgage or they see the market cooling and feel maybe they can get a better deal later on.
So I just did a video on that. Just make sure you check out that video where I talk about buyers are canceling contracts by the bunches. They're saying, hey, look, I no longer want to be in this market. I can't afford it because, we always say this, guys, 2% of increase decreases your buying power by $200,000. Now imagine that. You're getting a $300,000 home. It dropped down to $100,000. That's probably not the same neighborhood. That's probably not enough size to fit your family. You won't be able to afford it anymore. And you say to yourself, there is no way that I'm going to stretch myself and bankrupt myself for a home that I can't afford. And people are saying, no way, I'm not gonna do that. I'm not gonna risk everything to lose everything. And good on people who are doing that and saying, patience is the game. I will go ahead and rent for right now, sit on the sidelines, wait for prices to drop down, or wait till the interest rates drop down. But those are two different timelines, whichever one fits you first. And then we have individuals who think we'll be able to get a better price on the home by waiting it out for a recession. Well, let's just use some history. If you would have bought back in November, would you have overpaid? Yes, you would have. What did I just report on? 60% in Boise, 50% in other places, 40% in other places. They are dropping prices. And with price drops, it will get deeper and deeper and deeper. The closer you get into the wintertime, the closer we get to the recession. So at the end of the day, what am I saying? If you wait and you have patience in this game, it will pay off for you in the end. But once again, make sure you do your own research. Make sure you decide for yourself what makes sense for you and your family. This is not a one-size-fits-all situation, but please take this information along with your information to make the best decision for you. So I hope you got value out of this content, guys. I'm gonna need you to watch this next video here. It will help you learn all about this crazy housing market and also get your first rental property. Also, check in the description below. I have some useful links for getting free credit reports and also get into our membership program. See you on the next one. Thanks.